program for implementation. We've gone out, public comment, got a number of proposals and comments, and we're in the process of developing a program there.
When do you think that will come back?
I can't tell you when it will be completed, but we're working to get to complete it. And then when it's completed, it will be evaluated.
All right. In listening to your statement, you said towards the end part that you found at the beginning $700 billion you thought would be a sufficient amount. Now, within the troubled assets, you don't think that is a sufficient amount of what you have left to pursue going further. And then also listening to your speech, I think it was November 12th, where you talked about maybe bringing in attracting private capital, which could create some synergy, which I thought would be very positive. Maybe if you could expand on that, if that could be helpful, using the private capital, how it would work, who would receive it, how could you do the matching funding?
Well,
I don't think your mic's on.
Sorry. What I said in my remarks in November 12th was that we needed to evaluate this capital program once it's completed and look at the markets, and then be prepared to use another capital program if it's appropriate, and that we were working to develop other programs. A matching program would work along the lines of, if an institution, that whatever the scope of the program is, so whichever institutions might be eligible for this program, to the extent they could raise $1 of equity, let's say common stock, then it might be matched by $1 of preferred. And so this would have the advantages of making the capital of the TARP go further, and it also has the advantages of being a filter. So those healthy institutions that are able to raise money get a match. Now, the disadvantage of a program like that is it doesn't work in a market where capital is not generally available. So that's why we didn't start that way. So there's some advantages and some disadvantages. Another advantage might be that if we chose to go beyond institutions where there are federal regulators and we don't have regulatory capability here at the federal level or capability at Treasury to make the sorts of judgments that the regulators are making for us now with the banks, that the private market could be a filter. In other words, those institutions that are able to raise capital in the private market would have an ability to get matching funds. But no decision has been made. It's just a matter of programs that we are working to develop.
Has anyone approached you about coming forward outside of the financial industry, being able to do the matching money? I mean, is there capital out there willing to make this investment?
There is definitely capital available now for certain institutions and certain industries, no doubt about it. And so we stay close to the market. But again, you should take away the biggest part of what I was saying is, given where we are now, capital is more powerful, and you can get more. You can get more bang for $1 of a capital investment than you could buying in $1 of liquid assets, and so that is where the focus is. But I think it is premature to be starting another capital program while the current one is not even yet.
There'd be more capital out there.
We're over the time. The gentleman from New York.
Thank you, Mr. Chairman. First, I'd like to thank all the panelists for your leadership in stabilizing our financial markets, and congratulate Chairman Baer on an innovative program to help people stay in their homes. If it was expanded, she testified 1.5 million people could be kept in their homes without a financial loss to this nation, therefore helping to stabilize our economy, which is now our major concern. Chairman Bernanke, would you favor her program? Would you use TARP funds to expand FDIC's loan modification program to help stabilize our economy and help people stay in their homes?
Well, first let me say that I agree that we need to do a lot more on foreclosure prevention. It's very important for communities. It's important for our economy, for our financial system. So I very much commend Chairman Baer and the FDIC for the work they've done, and I think we need to build on these ideas. There are a few points I'd like to make. First, I think a very strong point of the FDIC program is it's simple and it's run by the servicers rather than by the government, and that's a plus, certainly. There are a couple of design issues that we need to talk about, I think, in the context of the Congress. Let me mention two. The first is that the FDIC program is focused on affordability, which is understandable, getting the payment down to 31% of income. The Congress recently passed the Hope for Homeowners, which takes a different philosophy, which is about principal write-down and getting mortgages out from underwater. Those are two different philosophies, and they depend on different views of what it is that keeps people in their homes. So an alternative approach would be to strengthen the Hope for Homeowners approach, just to give one option there. The second comment I would make is that, and we've discussed this extensively with the FDIC, is addressing the issue of what is the best way to induce servicers to actually undertake these modifications. The suggestion by the FDIC is that the government would insure some portion of the loss if the mortgage redefaults after it's been modified. And a concern that we've had about that is that in some cases that would be a very high cost if a borrower had a large capital loss in their home and they paid for 6 months but then moved or left for whatever reason, the government might be liable for $100,000 depending on how much the loss had been. So an alternative would be to consider other ways of subsidizing. But just in general, I want to say this is a very promising approach, and I think there's lots of interesting things to talk about here.
Secretary Paulson and Chairman Bernake, a large portion of the TARP monies have been used to pay off the AIG counterparties in the new AIG deal. And since the government is now running AIG, we should have full disclosure of what they are doing with the TARP monies, so Congress can appropriately manage our oversight. And will you make public who those counterparties are and how much they received?
Well, I think that information can be made available. AIG had many counterparties, banks, and other institutions where they essentially wrote insurance on.
Thank you. And if we can make it available, if you could get that to the committee, we'd appreciate
we'll see
it.
What we can. We'll see
that
what
would be
we have.
wonderful.
Yeah.
Thank you. And on the credit default swaps, it's my understanding, following up on your statement, that they were originally like a form of insurance taken out by an investor to insure against loss on securities owned by that investor, sort of like insuring one's home against a fire. The homeowner deserves to get paid by the insurer should his house burn down. It is also my understanding that a great number of investors and hedge funds bought swaps from AIG when they did not own the securities and were just betting on a default, like taking out an insurance policy on your neighbor's house and hoping that it will burn down so you can get paid. My question with respect to AIG is whether we are using taxpayers' funds to cover AIG's obligations to investors who have suffered real losses, or are we using some of the taxpayer funds to pay the investors who are basically gamblers the billions of winnings that they earned at AIG's expense? And I personally do not think taxpayers' money should be used to help investors who are gamblers to collect their profits. Rather than taxpayers' funds, they should be used to help those who stand to suffer real economic losses. And Mr. Bernake, Chairman Bernake, can we differentiate now between those two classes of swap purchases? Can we see where they are? Are we paying the gambling type, or only those that are real losses?
Congressman, I don't think you can really differentiate. People use credit default swaps to hedge all kinds of positions. Even if you don't own the underlying credit, you might be hedging against the stock or some other thing that you own, or maybe you have taking a position in that particular industry. And moreover, these are legal contracts. If they're not paid, then the company's in default and there's a bankruptcy process. And the entire purpose here is not to pay off the creditors per se, it's not to save AIG per se, is to avoid the contagion of losses and crisis that would occur if this huge financial institution with large exposures across the world were to fail and not to make good on its financial contracts.
The gentleman from Texas.